Right. Today I want to share about the Trump's One Big Beautiful Bill, amendments and market impacts. Right. Now, President Donald Trump sweeping tax and spending packages nicknamed the One Big Beautiful Bill has officially become law. At over 860 pages long, the legislation covers a vast array of policy changes such as tax cuts, welfare reforms, energy subsidies, military budgets, healthcare requirements, and more. But while the bill touches nearly every corner of US economy and social fabric, right? This report focuses specifically on how it affects the US stock market and the US dollar over the next 1 to 2 years. Okay. Now, in particular, we examine which sector may gain or lose from tax and spending shifts, whether rising Treasury yields could counteract market gains, and how foreign investors may react to the growing US deficit. Now, despite the bill's political controversy, its market implications are highly relevant for investors, businesses, and everyday Americans alike. Now, it's also important for us to dive into the latest amendments because there were a lot of discussions with regards to the bill before it was passed in the Senate and in the House. So the final version of the bill preserved most of Trump's original agenda, such as permanent extension of 2017 tax cuts and new child tax credits. It also introduced several notable changes. First of all, is remove provisions. A proposed 10-year ban on state-level regulations of artificial intelligence was stripped by a 99-1 Senate vote. The controversial Section 899, a retaliatory tax on certain foreign investors, was also dropped after pushback from financial institutions. Now, estate tax changes, the estate tax exemption doubled to $15 million for individuals and $30 million per couple adjusted for inflation. Now, the state and local tax, better known as SALT deductions, raised to $40,000 annually for 5 years, benefiting residents in high tax states. There are also small business deductions. The 20% qualified business income deduction for pass-through entities was made permanent starting in 2026. Spending offsets, Medicaid and food stamp cuts, New York requirements, and the end of multiple green energy subsidies. And lastly, debt ceiling raised by $5 trillion to avoid a short-term default, though long-term borrowing needs remain elevated. So overall, the CBO, which is the Congressional Budget Office, projects the bill will reduce tax revenue by 4.5 trillion and cut spending by 1.1 to 1.2 trillion, adding about 3.4 trillion to the national debt over the next decade, right? So what's the impact on the stock market? Now, the bill is expected to be moderately bullish for equities in the near term. So expect the equities to rise by cutting corporate tax and individual taxes while ramping up government spending, particularly in defense and infrastructure. It should lift corporate earnings and GDP growth. Now, some economists forecast, right, the bill could add up to 0.5% to GDP growth in 2026. Now, the One Big Beautiful Bill will accelerate corporate earnings growth, which ultimately will drive equity values. The S&P reached record highs in early July following the bill's passage. However, gains may be tempered by rising interest rates. Bond yields climbed sharply as investors priced in government's growing borrowing needs. Now, this is a classic sign of bond vigilantes pushing up yields in response to fiscal indiscipline. If long-term rates remain elevated, it could weigh on rate-sensitive sectors and slow broader market momentum. Okay? So in short, while the fiscal boost should support corporate profits and stock valuations, Rising Treasury yields may act as a drag, especially if Trump does not present a credible fiscal strategy to address mounting debt. Now, just to show you, now this is the 2-year Treasury, and you can see uh, that there was a spike itself right here, leading to the passing of the one big beautiful bill, right? And you can see the 2 years interest yield started spiking. This can be seen in the 10-year yield also started spiking. Okay, so this is a problem that the US needs to address, and they have to be really careful. So if you see, especially that the 10-year coming in to hit 4.5, and then from there still ticking off these highs and still pushing with this kind of price action right here, that will cause a lot of jitters in the market, and the stock market could actually start to crack under this kind of pressure. So this is something that you need to be on the lookout. Okay. So what are the sector winners and losers? For the winners is defense and aerospace. A substantial 150 billion increase in military and border spending will significantly boost the defense sector. Investments in advanced weapon systems, defense logistics, and homeland security infrastructures are likely to stimulate growth in this industry. Some of the notable companies in this particular area that can be like Palantir. Palantir is definitely one of those companies to look at. Okay, so you can have a good look into that area. But I won't be buying Palantir at the current pricing because it's just too high. But if it ever do fall to our valuation levels or new valuation levels upon the announcement of its earnings, then yeah, I would definitely, uh, actually put that up as part of the sharing like I did before. Next is fossil fuels. The bill favors traditional energy sectors by preserving or expanding tax breaks for coal, oil, and natural gas, while simultaneously opening up more federal land for extraction. This regulatory and fiscal tailwind strengthens the profitability outlook for domestic energy producers. Okay, so but buying oil companies, you have to be really, really careful because you don't not only you need to this may be a tailwind, but also at the same time you need to deal with the oil pricing as well, and that is highly, highly politically charged. Okay, so this kind of things you need to deal with. So trading is not an issue, trading the oil companies, but investing, I am usually very, very careful when investing with oil companies. Now, telecom and space, a massive auction of wireless spectrum, right? Creates opportunities for 5Gs and future 6G networks deployments. Companies involved in satellite communications, wireless infrastructure, and broadband expansion start to benefit from the surge in demand and the regulated access. We also have domestic manufacturing and auto with permanent full expensing for capital investments and R&D, right? US-based manufacturers are incentivized to invest in equipment, production lines, and innovation. Additionally, a provision allowing car loan interest deductibility supports domestic vehicle sales. Now, for manufacturing, you can look into NVIDIA, also the TSM. I know that TSM is a Taiwanese company, but most of its factories has already started to move into the US already. Okay, so other than that, you can look at like, for example, Caterpillar and so on, right? Honeywell, GE, these are the companies that falls under this category. Then we have small businesses, the permanent extension of the 20% pass-through income deducted from 2026 onwards provides a major tax relief to sole proprietors, partnerships, and LLCs. This is especially beneficial for businesses that primarily operates within the US and reinvest profits locally. Okay, so what about the losers? Renewable energy, we all know that. Okay, that's why the what do you call the Elon Musk is making a fuss out of it. That can be part of the reason why he's making so much noise, because this affects his company. The bill rolls back many of the clean energy subsidies introduced in earlier climate legislations. Tax credits for solar, wind, and other clean technologies are phased out or eliminated, reducing investment incentive and raising the cost of capital in this sector, right? So we also have the healthcare providers and insurers. The cut to Medicaid and the implementation of stricter work requirements reduce the number of insured individuals. This affects reimbursement flows and increases administrative burdens across much of the healthcare system. Now, although some of you may be concerned because I highlighted two particular stocks recently in the healthcare sector, the United Health and Novo Nordisk, right? But if you look into detail, they are not highly affected, okay, by Medicaid cuts. It's in the region of 15%. That's about it. So because their business is well diversified as opposed to some businesses that maybe are exposed up to more than 80% of Medicaid. So this will be a big headache for them, but not United Health and Novo Nordisk. And with the stricter requirements for in number of insured individuals, I think that uh can they may be in the beginning, they may be a bit tough, but I believe eventually things will correct naturally. That process and all the companies that I've highlighted early on will prosper, okay, but not companies that is affected, really affected, like I said, above 80% by Medicaid. Those companies will suffer a bit more. Now, higher education, the increase in tax levies on large university endowments, especially for institutions with high per student investment income, place a fiscal strain on private colleges. It may limit future capital projects, scholarships, and academic research funding. Okay. So electric vehicle makers, the repeal of a federal consumer tax credit for EV purchases removes a critical financial incentive that help drive adoption. Without it, demand may soften, especially in price-sensitive segment of the market. And finally, real estate. Rising interest rates prompted by higher Treasury issuance and deficit concerns are expected to put pressure on mortgage rates. You've seen, I've showed you there was a spike in 2 years and the 10-year bond yields. So this affects affordability, slows down housing demands, and compresses margin across the real estate developments and leading industries. So what about the effect on the US dollar? The bill's short-term effect on the US dollar has been negative. As the bill passed, the dollar index fell modestly, continuing its multi-month decline. Much of the selling pressure stems from expectations of rising fiscal deficits, which require greater Treasury issuance and create uncertainty about future inflation and rate policy. Foreign investors, particularly in Asia and the Middle East, are increasingly wary of US debt sustainability. BlackRock recently warned that unchecked borrowing poses the greatest threat to America's financial dominance. If demand for US bonds weaken, the dollar could face further pressures. So over the next 1 to 2 years, if Trump does not present a viable plan to balance the budget or stabilize deficits, the dollar may remain weak even as rates stay elevated. So while the Fed may delay rate cuts in this environment, the inflation pressures and crowding out of capital could erode investors' confidence in US financial assets. So as a conclusion, the One Big Beautiful Bill delivers a dose of fiscal stimulus that may buoy the US stock market in the short run, especially for defense, fossil fuels, and domestically focused companies. However, it also turbocharges federal borrowing, raising concerns about debt sustainability, higher long-term interest rates, and downward pressure on the US dollar. Okay, so with that, I hope you have a better understanding of the One Big Beautiful Bill and how it affects the US stock market as the US dollar as well. And that's my report for today. Thank you.